What's up, everybody? I'm late. Sorry, guys, I had technical difficulties. Had to redo my stream key and everything. Had to reset my whole live stream for me. I had some kind of proxy issue or something. But I'm here. I'm live. I'm excited. Federal Reserve's having an FOMC meeting, and we're gonna watch it today because I think Bitcoin, which is already breaking all-time highs once again, even before the FOMC meeting, could start going up again. And this is really exciting. Bitcoin's already at all-time highs. It's already at 76,600 after the presidential election. We soared massively. And as you guys already know, just some quick technical analysis real quick before the FOMC meeting, because I believe Jerome Powell is going to be speaking in around 40 minutes or 30 minutes. So we have some time, but we broke out of our weekly bull flag, which everybody knows this already. And I'm just going to quickly touch over it again. And look at these green candles. Look how bullish this looks. We have our daily candle close right over here, 9% in one day. Really bullish. And now we're doing another green candle. If we close this green candle, I say that we are officially breaking away. And we're probably not even going to come down to test. Like, that's exactly what's going to happen. Oh, the live stream looks like it's starting, but I'm gonna turn it on as soon as Jerome Powell starts speaking. So this third green candle, if we close in 5 hours, which most likely is gonna happen, is gonna show that we're 100% breaking away. We can tell that we're breaking away, but that's just some technical analysis. This third candle is really strong if we stay green, and it could cause Bitcoin to, of course, soar up to, like I talked about in my previous video, $87,000, $100,000. So that's just some things about Bitcoin, but Bitcoin's not the only thing that's going up. Everything's going up. If I just turn on my crypto heat map real quick, look at this. Everything's kind of green. If I just hide the non-movers, most of the market's green right now. Nothing almost is falling down on crypto. On stocks, though, if I turn on stocks, you see, there is some green in the last day. I mean, some red. Everything has corrected just a little bit after the last huge pump. But if we just click on something, for example, like this chart, for example, Morgan Chase, what we can see, if I just zoom in over here in the last day, oh, see, we have a huge pump, even though we have one massive correction now, even though stocks are mostly correcting after yesterday's pump, we still have this huge rally and we're overall really, really bullish. The only thing I have of concern about stocks is that everything has created a gap up. A gap up is when when stocks while off the market rise or fall, and we create this big gap in the price because once we open up the stock market again, it's much higher than it entered because everybody bought in on the weekend or when the election was happening, which was at night when stocks were closed. And usually, what happens is stocks like to close their gaps. Here's a gap down that occurred. We closed it. We came up and tapped it. And as soon as we closed it, then we had a little correction again. Of course, we have general movement to the upside, but we can see a gap down over here that was closed, a gap up that quickly got fallen down and closed. These are all small gaps. This gap right over here is a really big gap. If I go to S&P 500, and I just show you guys the gap in S&P 500. S&P 500 is still going up. My question is, are we gonna close this gap or are we gonna continue our pump to the upside? So, because of the elections, because of everything that's going on in the market, because of all the bullish momentum, many people are suggesting that we won't have a cool down and that we'll just continue our rally to the upside. And I say that today, maybe we won't have a cool down, at least for the next couple of hours because of the FOMC meeting. Some people believe that Bitcoin should have already cooled down by now. If we go back to Bitcoin, you can see that it's not cooling down as much as people want it to. Some people have their money in just smaller coins like altcoins, and so they're hoping for Bitcoin to slow down so that altcoins could start moving. But what we can see is that because of all the bullish news, because of all the bullish momentum that's happening and all the FOMO that it's creating, people are still buying in. We actually have a lot of bullish news. Like, for example, because Trump won, he is likely gonna allow federal chair Jerome Powell to serve remainder of his term. And if you look down here, he's probably going to be some kind of senior advisor to Trump. Trump is going to keep Jerome Powell up here. So many people are taking this as really bullish news. People are seeing this as really good. Another thing is BlackRock sees the biggest volume day ever at with $4.1 billion traded. So BlackRock ETFs, everything, people are noticing Bitcoin. Demand is flying up through the roof. I actually heard also, the stock market is pumping through the roof because people are noticing crypto, people are noticing everything through the elections, and demand is flying through the roof for Bitcoin. Now, one thing interesting about Bitcoin, as we already know, is that Bitcoin has a limited supply. It has 21 million in supply, so supply is out of the question. Supply will stay the same. And so, what we see with Bitcoin is that if demand goes up, demand is the only thing that drives Bitcoin. So when demand goes up, Bitcoin will fly up. Supply has nothing to do with Bitcoin because Bitcoin's supply will stay at 21 million. And so when demand goes up, like for example it is right now, that's why Bitcoin flies up like crazy. And the biggest thing right now that happened, I actually don't have it pulled up sadly, but I'll just tell you, the US government has just passed a bill which basically makes Bitcoin a reserve for the US government. They said they will be buying 200,000 Bitcoin every year for the next 5 years, which totals to 1 million Bitcoin for reserve. That's what they're going to be trying to buy. The problem with that logic is that there's only 21 million Bitcoin. 19 has been released. Most of it's either locked up or lost because of Bitcoin passwords. And there's probably only like 1 million Bitcoin floating around, probably even less. And when demand goes up, what happens? We have less Bitcoin on the market, which means the price goes up even more. So while the US government wants to invest 1 million, they're going to be investing it in slower quantities because there's not enough Bitcoin on the market. But because the US government is now buying in and investing, this is going to cause the whole world and every single country to also start buying in because it's game theory. The first person to make the first move will make the most gains. And so, game theory wise, because the US government has now made the first move, the whole world is now scrambling to catch up and they're also going to be starting to invest. Not only that, but a lot of millionaires and billionaires are also talking about Bitcoin. Everybody's noticing Bitcoin. Like I said already, ETFs, oh, wrong one. ETFs are seeing huge volumes. People are noticing stocks, they're noticing the Bitcoin ETFs, and they're investing into there because everybody's seeing Bitcoin as a currency, as a commodity that is just affected by drive, has a limited supply, pretty valuable, and isn't controlled by one central government. So, Bitcoin, that's why Bitcoins continue to go up. And that's why I believe this FOMC meeting will be pretty bullish for Bitcoin because when there's going to be a 25-point rate cut, which is what people believe will happen, 25-point rate cut is what's estimated that's going to happen for today's FOMC meeting. When that happens, what happens is now borrowing costs less. The dollar is a little bit devalued, and of course that causes people to go to Bitcoin because now they can borrow for less. More liquidity means higher prices for Bitcoin. Less devaluation of the dollar means higher prices for Bitcoin, and of course people want to invest into something that's not controlled by the government, that can't be affected, that maybe is gonna escape inflation, and that's of course Bitcoin. So Bitcoin is really bullish. Cannot underestimate Bitcoin. A lot of people don't realize how bullish Bitcoin is. They're not thinking that Bitcoin is going to reach 150K, or maybe some people don't think it's going to reach 212,000, but I say it could reach even higher than that. I think what basically Bitcoin's gonna go up 100%. It just can go up between, I don't know, $100,000 and $400,000. And just depending on the real world news, the only thing it can affect is how high it can go up, but it will go up high. That's what I'm saying. So Bitcoin really bullish because of what's going on. Everything is really bullish. Altcoins, crypto, stocks, everything's going up. Gold, let's check out gold real quick before the FOMC meeting. Gold still pretty down. Everybody has not put their money back into gold. Gold is still in a small downtrend. Of course, I bet gold is going to recover in the next couple of days. Same thing with silver, I bet. Then, yep, silver is also in a downtrend. Here's Bitcoin compared to silver. Bitcoin has decoupled from silver in the inverse direction. This is really interesting. Bitcoin's going up while silver's falling down. And like I talked about in my previous video, this is most likely because while while gold is becoming really popular, people are just selling their long-term lower risk assets and going risk on because of the bullish momentum, because people have a risk and a fear of missing out, FOMO. So, of course, while Bitcoin is going up, the smaller the less risky assets get sold and they get bought for higher risk assets like Bitcoin, like altcoins soon. And so this wave is going to happen. And I think today's FOMC meeting could be just another fuel source, another, what should we call it? Another catalyst for Bitcoin's movement. And I think that today is going to be a pretty bullish day. Of course, it's going to be a really volatile day, and I can't say for sure, but today I think would be a really, really bullish day. This is going to be just fuel for the fire. Looks like the FMC meeting has not started yet. They're still waiting. Like I said already, it's probably going to happen. I probably think it's going to happen in the next minute. He's probably going to come out. And what we're going to do is we're going to put him and we're just going to check up on Bitcoin on the 1 minute time frame. And look, so far, everybody, look at this. Bitcoin has stopped going up or down. Prices going sideways. People are waiting. There's just speculation of what's going to happen. Most people probably already know what's going to happen. 99% of people think, like I said already, 25-point rate cut. One thing actually before we actually watch the FOMC meeting. Now, if it starts, I'll just cut straight to that and we'll continue our topic after. Is the 2024 election? Oh, look at that, starting to fall. Is that because it's 11 a.m.? It's straight. It the FOMC meeting should start by now. I think literally just because it was 11 a.m. Bitcoin has just fallen just a bit. That's pretty funny. But anyway, about the election. Trump's president. We already know that. This has been a couple days ago. But I want to show you guys something, and that's a correlation between the 2024 and the 2016 election. And that's how similarly the states look. Most of the states are the same. Almost every single one except one. And can you notice that one? It's Nevada. Every other state is the same as it was back in 2016. They're Republican, Democrat, they're the same states except for Nevada, which has actually switched over to Republican. And as I've talked about, I believe Republican is really pro crypto. And so I think that because another state is joining and we can see that these polls don't lie, everybody's pro Trump and Trump's pro crypto, this could be another reason that crypto will go up. And like I said already, uh, this 2024 election technically is more Republican than the 2016 election. And that could mean that whatever, think about the hype that happened in 2016. The hype in 2016 was insane. It was massive. The hype in 2016, Donald Trump under 2016's reign did a lot of things, but people I think are reacting even more towards Trump than 2016. And that just shows a perspective of how many people are hoping that Trump is going to change a lot of things in America. And I think that this could be pretty bullish. This is going to be really bullish for crypto. And because even more states are now pro Trump and Trump is pro crypto, this could be really, really bullish for Bitcoin. Let's see what Bitcoin is doing. Nope, still fell down as soon as the FOMC meeting started. Let's see. Still not started yet. See, it says November 7, 2:30, which EST, which is 11:30 my time. Pretty sure I'm just going to continue then going around. Now, what's next? Let's just look at S&P 500 and all the other ones. Look at this. Dow Jones, S&P 500, Tesla, Coinbase, they're all going up. They're all continuing to pump up. Everybody's going. And what the one thing I want to show you guys is everything has a gap. Tesla actually has two gaps. And the question is, are we going to close it? Now, we haven't we don't always need to close our gaps. Usually we do, but for example, right over here, if I just pull up only Tesla, just let me just only have Tesla on here. Right over here, if I just go back a couple days to, for example, where was it? Right over here, back in April of 2024, we had a gap, never closed. Most gaps are closed, but if we're bullish enough, we won't close the gaps. And so the question is, are we going to close the gaps? We have to continue to watch this carefully. If I just go on the weekly time frame, look how bullish this looks even for stocks. You usually don't see that kind of bullish candle that fast. Now, our weekly candles for stocks closes in 1 day in 2 hours. So if we close this candle this high, this could be really big. We broke our previous high for Tesla. We're reaching our local high, the next high basically for Tesla. And if we break this high, I think Tesla could go to probably all-time highs really, really soon. Now, is that a good thing? Is that a good thing that everything is going up? It could be, because remember, there's two factors to everything we look at. There's the dollar and there's the stock. Same thing with Bitcoin. There's BTC and there's USD. BTC USD can go up because Bitcoin went up, or BTC USD can go up because dollar went down. So devaluation of the dollar and an increase of Bitcoin demand could both cause Bitcoin to go up. Now, looks like the trailer is starting once again. I'll let y'all know as soon as the FOMC meeting starts. But this puts in perspective that if we, for some reason, we have increase of the dollar strength, Bitcoin could of course fall down. And that's literally just the name of Bitcoin being a hedge against the US dollar. If the dollar does good, Bitcoin does poorly, and inversely, of course. And that's why right now, S&P 500, if for some reason our news is bullish enough, if for some reason the dollar does get devaluated, which I don't think it will, the S&P 500 could continue its trajectory to the upside and not close this gap. If we're bullish enough, if people are FOMO enough, we could continue our trajectory to the upside. As you guys can see, we're already at all-time highs, I believe, if I just go on the monthly time frame. Yeah, we're at all-time highs, and the S&P 500 is continuing its trajectory to the upside. Now, if Trump does stabilize the dollar, because the dollar has been devaluating its currency since I believe like 1982, since we decoupled from gold. I don't know the exact date, but I believe dollar last lost 99% of its currency value uh, through inflation. And of course, we can see that through stocks. Everything's flying up like crazy. But the question is, are we going to have a hyperinflationary curve with Trump becoming president, with how everybody's pro Trump, pro crypto, and Trump really wants to fix the economy? Technically, everything should stabilize. And what does that mean for inflation? Technically, could be brought down. And of course, I don't know that much. I can't say I'm only 16, but SV 100 could continue its trajectory to the upside, but slow down a bit because this huge pump could be contributed by inflation. Bitcoin, if the dollar does really good, I think it's still going to go up because while it's a hedge against the US dollar, US government is buying Bitcoin. Like I said already, demand is flying up. Everything is really bullish. And so I think that even if, for example, Kamala Harris, I think even if Kamala Harris became president, even if she devaluated the dollar by any reason, the Bitcoin price, even if it would have fallen in the short term, would have went up and continued to go to 250K, maybe in $300,000, because Bitcoin is not affected by these small real world events, like, for example, the devaluation of the dollar. That's actually going to strengthen it in the long term. People are going to go from a currency that's getting devalued to a currency or a commodity that's getting strengthened and that's not controlled by a government and that can't get devalued. So everybody runs to Bitcoin, and that's one of the reasons that Bitcoin's going up. I actually see right now, look at this. This is Solana. This is looking really bullish. Look at Solana, guys. I'm just going to look at some smaller coins while we're waiting for the FOMC meeting to start. Solana is looking really bullish. It has broken out of its this big bull flag and has actually broken its previous high that was at 193, $193.86. 194. It's currently at 196. So Solana is currently going up. And I think that Solana is about to reach all-time high really, really soon. Solana's all-time high is at $260, and it looks really, really bullish because this bull flag, it's kind of a mid-cycle top that Bitcoin has. We've been making this huge bull flag for 8 months. Solana was doing the same exact thing. Most of crypto was, but Solana has a bull flag, and so technically it could rise up a little bit higher than Bitcoin, uh, just based on this, not percentage wise, of course, but look at this. The target for Solana's bull flag is $310. That's much higher than the previous all-time high at $260. And I want to show you guys something that's the Fibonacci extension. We have for Solana some pretty big key levels that we will stop at. And one of my favorite ones is the 0.618 level, and that's at $235. So I think right now, currently, Solana, because it broke through its huge resistance at 0.382 right over here at $187, it's about to go to 235 really, really fast. Of course, stopping maybe at 211, because what's interesting is that 211 is the zero point 0.5 level of this Fibonacci extension, and it's also the local top for this previous pump on the bull market. And that's really interesting because that means that this crash the bit Solana did actually let me check that. How much percentage did this crash cause Solana to fall? Yeah, it was 40%. It was a 50% correction, and so that's why we have a zero point 0.5 level right over here. So this 50% correction was just a normal part of the cycle. But we have a huge resistance at 210, which we already know that's a previous high. And then we have the next resistance at 235, which is the next one after that. So for Solana, it's also looking really bullish. It's going to stop at 211. It's going to go up to 235. And of course, so on after that until we reach 310, which is going to be the around 58%. So Solana could have minimum of 58% still to go. Solana's looking pretty good. We could still invest technically into it if we really wanted to. You got a 60% pump. Still waiting for Solana. Solana's a pretty good coin to invest to if you want lower risk, but you don't want such a low risk that you don't have enough reward, like for example Bitcoin. Of course, guys, this is not financial advice. This is just something I would do. I'm only 16. You guys research on your own. You figure out where you put your own money. I'm putting my own money into my own things. I'm just sharing you guys my personal opinion on what's going on in the market. Anyway, continuing on, what's going on? Let's look at some smaller coins because I heard there's some big coins that are pumping like crazy. Let me just search up by performance by week, for example, and look at some smaller coins. Like look at Dogecoin, for example. Dogecoin, meme coin. Why is it going up? Just because everything else is going up. And Dogecoin has also been pumping up like crazy. And while Dogecoin is a meme coin, that doesn't mean it can't start going up. And look at this. Dogecoin, for example, is probably going to reach its $23 previous top. And will it go all the way back up to 74 cents? I don't know. But technically, it could. While this was hype, with Bitcoin going up, I think we could reach a pretty good level, maybe even 35 cents previous high right over here, make a pump like this. I don't think we're going to stop at $23. I think Dogecoin has a pretty good path ahead of itself because when we're in a bull market, Bitcoin goes first, then crypto like Ethereum, then smaller coins, and then the meme coins. It's just staggered a bit. Price changes. First the main spotlight goes on Bitcoin, then Ethereum, then altcoins, and then of course the meme coins. I actually had a topic in a conversation today about this same like altcoins because I had a friend who has a ton of altcoins, almost no Bitcoin, and so he's just like, "Why is Bitcoin pumping? I want it to stop pumping so that altcoins will pump, so I will make money." And I had to explain that yes, Bitcoin's pumping, but the only thing that changes is when the altcoins will go up. Because altcoins will go up, and I bet they're going to go up around a good percentage. And if Bitcoin goes up higher, altcoins will also go up higher. They're just going to go a little later. Speaking of which, this conversation happened at my Crypto for Us Telegram chat. The link is on my main YouTube channel page. If you guys want to go there, you can ask a ton of questions to me. You can, I will reply. I talk about what's going on with the crypto market a lot there. You feel free to join this Telegram group chat where I am pretty active, more active than I'm on YouTube. So feel free to join that Telegram group chat and ask questions. I might be able to even answer them on stream if you join fast enough. Anyway, let's continue. We have more crypto, of course, not just Dogecoin, smaller coins. I actually heard there was something called TOX. If we just go on TOX, hmm, let me just find it. TOX. Nope, wrong coin. Well, there was a coin called TOX which went up around 50%. That's insane. Uh, Continuing, let's look at what else we have. If I just turn on crypto bubbles, actually, let me search up crypto bubbles on the weekly. Look at this. Grass 197, Goat 66, Neuro 49, Crow 26%, Arrow 25, Doge of course 21. That's on the weekly. On the day, it's already probably yeah, still Grass, Ray, Goat, Mirror, Nero, Beam. All these are all going up. Look how many reds we have. Barely anything. Nothing's falling down. Nobody cares that we've pumped this much. We're still going up. And this is really, really bullish. Let's go to the top 200. Yep, we have continuing. Just everything's green. Crypto is green on the top 200, top 300. Everything's going up. The whole cryptocurrency world. What is Bitcoin doing? 76,500 reacting. Let's see. What's the FOMC meeting at? Nope, still hasn't started. Yep, probably gonna happen in around 15 minutes at 12 at 11:30 for me, guys. 2:30 for Eastern time. So we still have 15 more minutes. Let me know, you guys, if you guys want me to just search up a coin or something like that. I want to show you guys one more thing, and that's like I mentioned this in a video already. Jerome Powell, the SEC chairman, Jerome Powell, who's been suing almost every single exchange, every single government, every single uh, even the ETFs. He doesn't allow the ETFs to happen. He's really anti-crypto. Probably gonna get fired by Trump. Trump, like I said already, he's really pro-crypto. He's gonna put somebody else there that's gonna be really pro-crypto. How he says we have regulations, but from now on the rules will be written by people who love your industry, not hate your industry. So new regulations will be put in on crypto. Crypto without regulations, how he says, is of course not good, but these regulations will be completely different. He's going to get rid of these anti-crypto crusade regulations put in by the previous term's president, but I think this means that crypto could have a this is really good. Maybe perhaps even coins and exchanges like Bybit, Binance, stuff like that, exchanges that are currently not allowed in the US could get opened up in the US once again. This is really bullish. Exchanges could have more openings from the US. I personally really want to get into Bybit, but I can't. I'm in the US. You using VPN, you can, of course, and people have found a way to get themselves around these what how do you call sanctions on the Bybit and all these exchanges. But of course, if Trump does decide to change some of the rules and he does make it more pro crypto, we can see some more bullish momentum in crypto because we have now more demand in the US on how do you call it? These world exchanges like Bybit, Binance, Bitfinex, stuff like that. Most of the exchanges in America require KYC, and KYC requires you to be 18. Me being 16 means I have to go under. Of course, I found different ways to go through, but these non KYC exchanges are, of course, banned from the US. And perhaps Trump being president and us having, I believe, not just here, if I just get rid of this, not just having a pro crypto president, but pro crypto Senate, and perhaps even a pro crypto House if we get rid of, if we're really close to having a House that's at Republican, and most of them are pro crypto. And so having a pro crypto Senate, House, and President is going to be a slam on the anti crypto regime. I think this is going to be really bullish 4 to 8 years for crypto. And while crypto and Bitcoin still continues its 4 year cycle, this cycle could probably reach highs that we don't imagine if we have the right catalysts. And these highs might not have that big of a downtrend after that all-time high. I've made a video. Let's see. Before I say anything, let's continue to look at the live stream. Nope, still not started yet. I've made videos talking about where I think Bitcoin could go, and I talked about 350K being targets. I actually found something more interesting. If I go on the logarithmic scale for Bitcoin, many people see Bitcoin as having a curve, and how they say, and that's because it kind of does. As Bitcoin gets bigger, it has less percentage moves, which is a logarithmic scale is just showing the percentages of pumps and dumps. And as Bitcoin gets larger and larger, we have less volatile moves, so less percentage gains. But while many people draw the curve as something like this and basically saying Bitcoin will one day stabilize, putting the top maybe at somewhere at 250K, what you could technically say, if you really wanted to, is that Bitcoin is doing some sort of channel like this, or let's lower it down like that, for example. And one day, of course, it's gonna end. This is a rising wedge. One day, of course, it's gonna break out of it. But if we decide to keep this wedge and reach the top of the wedge this cycle, technically, currently if we decide to reach it today, which would mean Bitcoin pumping $185,000 or what, like $110,000 in a day, not happening. But if we were to reach it today, the top is at 179,000. If we continue to go up at a steady rate, what we can see is we could reach the top and it's going to be at around 250. And if I, of course, take and move top, this top line to just be the tips of all the previous highs that we had in the last two cycles, we have, if we take a steady increase, a top at around $350,000, which is what I've been talking about with my Fibonacci extension taking us that high. And a logarithmic Fibonacci extension also shows something a little bit different. If I show a logarithmic Fibonacci extension, I believe it takes us differently than a normal price Fibonacci extension. Oh, actually, I think it takes, no, it's different. And what we can see is we have uh 0.618 retracement line at 87,000 for Bitcoin, which is why I say 87,000 is a big level for Bitcoin. We have the next level, which is at 150,000. Once again, this is all the Fibonacci is just calculating the percentage or the ratio of the previous pump to the pump that's coming up. So we just grab and calculate this rise right over here from 15,000 to the mid-cycle top, and then we bring it down to the crash and basically say that the next leg up is happening from here. And it tells us if we decide to do the same exact thing that we did right over here in 20, what was this, 2023, going from 15,000 to 70,000. Once again, it's the logarithmic chart, not everything's to scale. Percentage wise, the one ratio takes us to 100,000, like I talked about already. But the 1.618 is taking us to 150. The 0.618 is taking us to 87, which is also a big target I've been talking about. The 2.618 takes us to 200,000. The 3.618 takes us to 250. The 4.618 takes us to 315, which are all big levels that I've talked about in the past. Of course, we have the 15.618 at $1 million. I don't think we're going to reach that this cycle. If we do, this is going to be amazing, but that's a little tough because, like I said already, Bitcoin's getting harder and harder to move around because of how big it is, and this would be a 1,100% gain from where we are right now, and that would be a 5,800% gain from the bottom. And if I look at the previous cycle, I don't think we even had that much of a percent that cycle. We only went up 2,000%. If we look through history, this is really obvious. Bitcoin, while it getting bigger and bigger, has less percentage gains. And this technically, a lot of people say this will be the last bull market that gives you significant gains because after this bull market, what's going to happen is we're going to have smaller rise and falls. And some people are saying we're going to break apart from this 4 year cycle that we do all the time. And I say we could start doing that. Like we're going to slowly reach to 1 million, something like this, maybe. But I still think there's going to be really big gains that happen because, like I said already multiple times on this live stream, I'm going to say it one more time. Demand is increasing, supply stays the same, price will go up. And demand is increasing at an all time high. this cycle. And while we're in uncharted territories right now, I think that we know probably around where it's going to go. Sorry, we don't know where it's going to go. We think we know that it's going to reach 220K, but because of the bullishness of this market, like I said already, we're going to go much higher than that. Let's see, how much do we have? We have 7 minutes until the FOMC meeting. And let's just look at one more time before I look at something else. What is Bitcoin doing? Well, let's see. Ever since the 11 a.m. mark right here, Bitcoin's been in a downtrend. Let's do a line. 11 a.m. happened right over here. 11:30 is right over here. And as soon as it becomes 11:30, I will put a horizontal line of showing where Bitcoin's line is. And this is what I like to do every single FOMC cycle. I like to see whether Bitcoin is reacting bullishly or bearishly to the news. And that's by putting an average line of where Bitcoin is currently. And if Bitcoin is above this line, when the FOMC meeting ends, that's bullish reaction. And if we fall below this line when the FOMC meeting ends, that's a bearish reaction. And that's because the money doesn't lie. And whatever people are doing is how they expect Bitcoin to go. And so I'm gonna place this line at somewhere where I assume Bitcoin's gonna go to when the meeting starts, but we'll change it. I think currently it's gonna be somewhere like right over here. But let's move on. What else do we have? You guys want me to look at some smaller coins? Coins like, for example, Shiba Inu, which aren't really connected to Bitcoin and have stabilized quite a bit because their meme coins still go up. Coins like Shiba Inu, for example, this coin right over here, this coin, it is also making a bull flag. And this bull flag could take us, let's see, I'm gonna calculate this by percentage. Shiba Inu is like 1 millionth of a cent. I don't know how much, how many zeros is that? One, two, three, four, 4 decimal points to the right before we actually get a number. But this would be a 33% gain, which you could take Shiba Inu to 0.000006. Fox coin, that's what it's called. Thank you. Fox coin, Fox token. I thought it was, yeah, right over here. I was talking, this is what I was trying to find in the beginning of the live stream. This coin did an insane pump after the elections. It reacted really greatly. It had a 109% rise. This is insane. And of course, the actual election pump was right over here. This was the day of the election, but still, this coin was just riding the market. It's the number one, I think, coin right now. Maybe I'm wrong. It might have been already outperformed, but look at this. This was the day of the election. We went up 30% in one day. In one day, we went up 30%. At Fox token is really, really crushing the market right now. And of course, we're doing a bull flag. We're doing a sort of consolidation pattern right now, which means we're going to continue going up. Maybe even we already broke out of this bull flag like this. If you draw a line sort of like this, you can see that we might be already tapping the top of the resistance line that's now a support line, confirming support, which means the next thing for us to do is to go up to 15 cents. And this 15-cent pump could mean a 132% gain. Now that's of course if we decide to confirm support and start going up, and for that to happen, Fox token needs to break its previous high and confirm that we're in a bullish trend. We also should of course break our previous high at 8 cents. But if we go on the daily time frame, one thing about Fox token is that of course it's not it might not reach its previous high at 15 cents. It might be able to if we really want to. And of course, I don't know if we will reach $1 like we did in the beginning. But what I can know is that this bull flag that we're currently doing takes us to 15 cents. And what happens after that is, of course, gonna be decided once we get there, because currently, if we reach 15 cents and get rejected for Fox token, this is of course a double top, which we do not want because double tops are not that good. But if you reach this level, we could be making a strong trend, because if we do a pump consolidation, we do a pump consolidation, what's after that? We have another pump. So technically, Fox token looks pretty bullish. It's of course a meme token, and of course that means that Bitcoin's going to go first, and the meme tokens are going to follow. But once again, that's a Fox? That's a good question. Let's go on CoinMarketCap. CoinMarketCap. What can we see? Before I answer your question of how old Fox token is, let's just look at the biggest movers in the last 24 hours. What we can see: Goatsis Maximus 24%, Nero 23, Maker 20, a lot of 20%, 10, Beam, Pepe, Let's Go Pepe, Cardano 14%, Ave 8%, a lot of gainers. Let's see how many in the last 24 hours have fallen. Helium, only 2%. Look at this. Almost none of the crypto. And over here, if we reach 1, 2, 3, 4, 5, 6, 6 coins only fell down more than 1%. And then we reach the coins that have just not moved almost in the last 24 hours. In 7 days, we have, of course, again, Ghosts Maximus. What in the world is this coin? This coin's outperforming everything currently. It's pumping like crazy. This is a really big. This is a new coin too. It released October 14th, 2024. It's pretty big. Anyway, a lot of the market is really bullish right now. Before the FOMC meeting starts, let's just real quick look at Shapeshift token, Fox token. When did it release? Fox token released at January 6th, 2021. So it's really big. And if you zoom out to the all time, you can see that some people will call this coin dead. But when you zoom in, you do see some movement. And that's why, while this coin probably won't reach highs like this, it will go up. Okay, FOMC meeting starting. Let me know if... Let me know if you guys hear this, by the way. Currently, there's no audio, but... There he is. Okay, let me pull up. You know what? I'm gonna do this a little differently.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong overall and has made significant progress toward our goals over the past 2 years. The labor market has cooled from its formerly overheated state and remains solid. Inflation has eased substantially from a peak of 7% to 2.1% as of September. We are committed to maintaining our economy's strength by supporting maximum employment and returning inflation to our 2% goal. Today, the FOMC decided to take another step in reducing the degree of policy restraint by lowering our policy interest rate by a 1/4 percentage point.
Boom. 1/4%.
We continue to be confident that with an appropriate recalibration of our policy stance, strength in the economy and the labor market can be maintained, with inflation moving sustainably down to 2%. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose at an annual rate of 2.8% in the third quarter, about the same pace as in the second quarter. Growth of consumer spending has remained resilient, and investment in equipment and intangibles has strengthened. In contrast, activity in the housing sector has been weak. Overall, improving supply conditions have supported the strong performance of the U.S. economy over the past year. In the labor market, conditions remain solid. Payroll job gains have slowed from earlier in the year, averaging 104,000 per month over the past 3 months. This figure would have been somewhat higher were it not for the effects of labor strikes and hurricanes on employment in October. Regarding the hurricanes, let me extend our sympathies to all the families, businesses, and communities who have been harmed by these devastating storms. The unemployment rate is notably higher than it was a year ago, but it has edged down over the past 3 months and remains low at 4.1% in October. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed. Overall, a broad set of indicators suggests that conditions in the labor market are now less tight than just before the pandemic in 2019. The labor market is not a source of significant inflationary pressures. Inflation has eased significantly over the past 2 years. Total PCE prices rose 2.1% over the 12 months ending in September, excluding the volatile food and energy categories. Core PCE prices rose 2.7%. Overall, inflation has moved much closer to our 2% longer run goal, but core inflation remains somewhat elevated. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. We see the risks to achieving our employment and inflation goals as being roughly in balance, and we're attentive to the risks to both sides of our mandate. At today's meeting, the committee decided to lower the target range for the federal funds rate by a quarter percentage point to 4.5% to 4.75%. This further recalibration of our policy stance will help maintain the strength of the economy and the labor market, and will continue to enable further progress on inflation as we move toward a more neutral stance over time. We know that reducing policy restraint too quickly could hinder progress on inflation. At the same time, reducing policy restraint too slowly could unduly weaken economic activity and employment. In considering additional adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. We are not on any preset course. We will continue to make our decisions meeting by meeting. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains strong and inflation is not sustainably moving toward 2%, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly, or inflation were to fall more quickly than anticipated, we can move more quickly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to our discussion.
Thank you.
Okay. Listen to how he talks. First of all, he's trying to convince everybody that everything's great. He's calming every single person down, because every single time the FOMC meeting happens, everybody goes kind of speculative and tries to figure out what's going to happen. They're scared, of course. And look at this. He finished talking. Everybody, the uncertainty is a little bit most of the way gone. It will fully go away when he stops talking. But the price is already starting to go up. We, of course, are still in around the same range. People are still uncertain. But what he said, oh, hello? Sorry, I had a rapid glitch on the system for some reason, and everything started moving really slowly. Let me know if there's a if you guys can hear me and if everything's great. Anyway, uh,
Into account through that channel.
Chair Powell. Nick Timros from the Wall Street Journal. Roughly 1 year ago, when the 10-year Treasury was flirting with 5% and 30-year mortgage rates were near 8%, you noted how higher borrowing costs, if they were sustained, could weigh on economic activity. Given that you've said you believe policy is restrictive and the Fed is now dialing back that restriction, are the growth risks presented by higher U.S. Treasury yields today any different from those you identified 1 year ago when inflation was still meaningfully above your target?
So I would just say this: we've watched the run up in bond rates, and it's nowhere near where it was, of course, a year ago. I guess the long bond rates are well below that level. So we're watching that. Things have been moving around, and we'll see where they settle. I think it's too early to really say where they settle. Ultimately, I'm sure we've all read these decompositions of what, and I certainly have, but it's not really our job to provide our specific decomposition. I will say, though, that it appears that the moves are not principally about higher inflation expectations. They're really about a sense of more likelihood of stronger growth and perhaps less in the way of downside risks. So that's what they're about. We do take financial conditions into account if they're persistent and if they're material. Then we'll certainly take them into account in our policy. But I would say we're not at that stage right now. It's just something that we're watching. And again, these things don't really have mainly to do with Fed policy, but to do with other factors in the economy.
If I could follow up, is the September SEP, are those rate projections still valid? Do they still seem relevant given where we are now?
You get halfway through the cycle between the last set and the next set. I wouldn't want to comment one way or the other. Let's talk about the data we've gotten since the last meeting. So, in the main, the economic activity data have been stronger than expected. The NIPA revision was stronger. Certainly, the September employment report was stronger. The October report not stronger. Retail sales stronger. So overall, though, I think you take away a sense of some of the downside risks to economic activity having been diminished with the NIPA revisions in particular. And so overall feeling good about economic activity. So I think we would factor that in. At the same time, we got one inflation report, which it wasn't terrible, but it was a little higher than expected. So I think really the question is December, and by December we'll have more data. I guess one more employment report, two more inflation reports, and lots of other data, and we'll make a decision as we get to December.
Gina Smilik from the New York Times. Thanks for taking our questions, Chair Powell. When it comes to December, what will you be looking at specifically as you try to make that decision? And then as of the Fed's economic projections in September, you had written down 4 quarter-point interest rate cuts in 2025. Do you still think that those are likely? Is that sort of the baseline outlook at this point, or has that shifted? And if it shifted at all, can you give a little bit of detail as to why?
I can't. We don't fill out an SEP, and I can't characterize one that wasn't filled out today. So I can't really speak for kind of exactly where the committee is. I will just say for December we're going to be, again, at every meeting we're going to be looking at the incoming data and how that affects the outlook. As you know, we're in the process of recalibrating from a fairly restrictive level at 5.33%. After today's move, we're down 75 basis points. And we're asking ourselves, is that where we need to be? That we're trying to steer between the risk of moving too quickly and perhaps undermining our progress on inflation, or moving too slowly and allowing the labor market to weaken too much. We're trying to be on a middle path where we can maintain the strength in the labor market while also enabling further progress on inflation. We think that's where we are, but that's the question we're going to be asking in September. And in other meetings. And again, I can't really update you on the committee's thinking because we don't fill out an SEP at this meeting. Yeah,
totally appreciate that. I guess when it comes to your own thinking, do you think that a full percentage point of rate cuts in 2025 is a reasonable outlook?
Again, we're going to wait and see how things come in December. I mean, it's just, I would put it this way. We're on a path to a more neutral stance. And that's very much what we're on. That has not changed at all since September. And we're just going to have to see where the data lead us. We have, a whole 6 weeks of data to look at to make that decision in December. Obviously, I'm not ruling it out or in, but I would say, I would say that, again, we didn't update the SEP, so I'm not going to characterize, where the committee would be.
Howard.
Thanks, Howard Schneider with Reuters. I wondered if you could please elaborate, explain a little bit the two changes in the language of the statement here. In the first paragraph, when you say inflation has made progress, dropping the word further progress, and in the second paragraph, dropping the sentence that the committee had gained greater confidence that inflation was progressing towards its 2% goal. Is there any policy substance behind either of those changes in language? Is it meant to open the door to a December pause? Is it meant to communicate anything about the stickiness of core inflation the last 3 months?
Not really, no. So let me tell you what we were thinking. So the test of gaining further confidence was our test for the first rate cut, right? And so we met that test in September, and therefore we take that test out. If you leave it in, then it's new forward guidance. It's brand new forward guidance. What do you mean by it? Are you requiring yet further? We have to say yes or no at every meeting whether we've made further progress. The point is we have gained confidence that we're on a sustainable path down to 2%. So that I would tell you is what that's really all about. It's not meant to send a signal. Neither of those is meant to send a further signal. And saying further progress, it becomes a test. We don't want to be. We don't think it's a good time to be doing a lot of forward guidance. There's a fair amount of uncertainty in that. In what I've said, the path that we're on, we do know where the destination is, but we don't know the right pace, and we don't know exactly where the destination is. So
Wait,
the point is to find that.
we do know where the destination is, but we don't know what the pace is, and we don't know what the destination is. What in the world? So,
Steve Leisman, CNBC. Mr. Chairman, you talked about higher rates, perhaps from an expectation of higher growth. You didn't talk about it in terms of expectations of higher deficits. Is that something you think might be behind the recent rise in interest rates, and are rising deficits a concern to you?
So we don't comment on fiscal policy, and again, I don't have a lot more to say on what's driving bond yields. In terms of policy changes, though, let me give you a sense of how this works in the ordinary case. Let's say Congress is considering a rewrite of the tax laws. Doesn't matter what's in the content. So we would follow that. At a certain point, we'd think we see the outline, so we'd start to model it. And then we'd wait, and then at a certain point, the staff would brief the FOMC and say, these are the likely effects. There's lots and lots of literature on the effects of tax policy changes on various parts of the economy. So we'd try to get smart on that, and then the law actually passes. And you'd start to put it. You'd probably run an alternative simulation before that happens, just to keep people trying to understand it. Then when it actually passes, it goes into the model, along with a million other things. So, we have a very large economy. Many things are affected.
I'm gonna mute him because he's starting to answer these questions, but he's not really answering everything. And this is what we're used to. We're used to him not answering anything. He tries to be really vague, but he did say something like, as you can see, the market didn't fully like. I mean, at the same time, like, uh, we didn't really react to it that much. This was only like what, a 0.6% crash, and we didn't really react to it, and I have him on hold for now because he said everything. He's still saying the same exact things that he did last FOMC meeting, and that's a 25-point basis cut. We're still progressing down to lower inflationary levels. We'll monitor how everything's going. Everything's going, they say, okay. But the only thing that I don't get, and the only thing that's concerning, is that he did mention about how he they're not sure at what pace they're gonna go, and also he said, like I said already, I know what the direction is, but we're not sure what the pace is, and we're not sure what the fully direction is. So they're not fully sure what the direction is. That's what I think. That's how I heard it. And once again, he's avoiding questions, which I guess people did not like, especially the question about the interest rates itself, where he said he tried calming everybody down, basically saying, uh, if we tell somebody what we're gonna do, now it becomes a test, and we have to uh, keep our word for it. So that what they're saying is we're not going to say anything because if we say it, we have to do it, and as long as we don't say it, we can say it in our behind our back, and we don't actually have to do it. So whatever they release, which is it's set in stone. And if they keep everything simple and they don't release that much to the people, they can change things in the background without anybody knowing. And that's why everything is kept so secret in the FOMC meeting, why everything is kept so confusing, so that maybe people didn't understand what's going to happen, and so basically they don't mess up because they didn't fully fulfill what they said they're going to do. But 25 basis point is happening, like the Fed watch said is going to happen, and yeah, everything's continued to go up. The market doesn't really care that much. Once again, the election that happened a couple days ago, I think, really spiked Bitcoin. And now, whatever happens, I'm going to move him out of the way for a bit. Whatever happens, Bitcoin still will go up because people aren't reacting to the FOMC meeting as much as they usually do. I mean, we did fall down a bit. Yes, we did fall down a little bit, but currently that ties in with technical analysis really, really well. And it actually doesn't have to do with the FOMC meeting at all because this crash, I believe, yeah, this crash happened before the FOMC meeting. And currently, look at this. We're just continuing our trajectory, and technical analysis is staying the same. And technical analysis, this falling channel, because it's staying the same, means people don't really care about this FOMC meeting that much. The money doesn't lie. People don't care. Right now, we're currently breaking out of the FOMC meeting. This is the line where the neutral zone is technically. People don't care that much. And Bitcoin's currently just going to continue its trajectory to the upside. Now, S&P 500 is also going up. Look at this. S&P 500 is also reacting to this bullishly, and that's because, of course, well, actually, it's because interest rates going to get lowered. People are borrowing gets increased, which means people can now invest more. The valuation of the dollar, of course, happens if I believe lower interest rates, but it's barely noticeable. And I think mostly because lower interest rates, you can borrow more, you can invest into the Bitcoin more demand. And of course, FOMC meeting puts a lot of people into a question of should I keep my money in the dollar or should I invest into Bitcoin? And so Bitcoin's going up. As we've heard the bullish news, it's going up currently. But let's wait till the FOMC meeting ends before saying anything else.
And destination as the outlook evolves. So, for example, if we were to see the labor market deteriorating, we'd be prepared to move more quickly. Alternatively, as we approach levels that are plausibly neutral or close to neutral, it may turn out to be appropriate to slow the pace at which we're dialing back restriction. Again, haven't made any decisions about that, but that's certainly a possibility. If you can think of it as similar to what we do with asset purchase, with asset runoff, with QT. So we reach a point where we slow the pace, much like an airplane reaching the airport slows down. And so we're thinking about it that way, but it's something that we're just beginning to think about.
Edward.
Thanks, Chair Powell. So with the noise in the jobs reports that we've seen, and you look at the Fed's favorite inflation, PCE inflation, overall it's 2.1%, very close to the Fed's target, but core inflation is 2.7%, and it's been that way since July. So why doesn't this data give fuel to a rate pause for this meeting?
Well, so I think if you look at the 3 and 6 month, you're quoting the 12-month. So we look at all of them, right? But if you look at the 3 and 6 month core PCE, you'll see they're around 2.3%. So we look at all of them, and we look at 12 as well. But what it's telling us is that we really have made significant progress, and we expect there to be bumps. For example, the last 3 months of last year, the core PCE readings were very, very low, probably unsustainably low. So that's why forecasts generally see a couple of upticks toward the end of the year. On the other hand, the January reading certainly looks like an example of residual seasonality, so that we saw last year. So when that falls out of the 12-month calculation. In February, we should see a thing down. So it'll literally be a bump up and then down. We understand that. Overall, you see the progress on inflation, and you also look at the economy and you say, what is the inflation story now? Where's it coming from? So I point to a couple of things. One is the non-housing services and goods, which together make up 80% of the core PCE index, are back to the levels they were at the last time we had sustained 2% inflation, which happens to be in the early 2000s for a period of 5, 6, 7 years. So they're back to that level. What's not is housing services. So let's talk about housing services. Housing services is higher. What's going on there is, market rents, newly signed leases are experiencing very low inflation. And what's happening is older, leases that are turning over are taking several years to catch up to where market leases are, market rent leases are. So that's just a catch-up problem. It's not really reflecting current inflationary pressures. It's reflecting past inflationary pressures. So that's one thing. The other thing is I'd say look at the labor market, not a source of inflationary pressures. Where's it coming from? It's not a very tight economy. What is the story about inflation? You see that catch-up inflation also in insurance and several other areas. So you're seeing, we're not declaring victory, obviously, but we feel like the story is very consistent with inflation continuing to come down on a bumpy path over the next couple of years and settling around 2%.
Guys. 6
that
more
story
minutes.
is intact, and it won't be one or two really good data months or bad data months aren't going to really change the pattern at this point now that we're this far into the process.
Bad data
So you're
months.
quickly trying to get to that neutral rate that you see, or do you foresee that you have some time to get there?
Nothing in the economic data suggests that the committee has any need to be in a hurry to get there. We are seeing strong economic activity. We are seeing ongoing strength in the labor market. We're watching that carefully, but we do see maintaining strength there. And so we think that the right way to find neutral, if you will, is carefully, patiently. Again, that's not meant to have a specific meaning, other than to the extent the economy remains strong, we have the ability to take advantage of that as we try to navigate that middle path between the two risks.
Yeah.
Craig.
Hi, Chair Powell. Craig Torres from Bloomberg. 2 questions today. Did you learn anything about what Americans think about the economy from the election results? First question. Second question. I want to talk about some labor market indicators, and I do so with great respect for your attentiveness to the maximum employment side of the mandate, Chair Powell. So the unemployment rate has been at 4% or higher for 6 months. One of the broadest measures of unemployment is up about 0.5 point from a year ago. Compensation gains are sliding back. The quits rate, a signal of labor market dynamism, has been heading down to that bad neighborhood of the 20 teens. So you have put a marker at Jackson Hole saying any further cooling is unwelcome. It is cooling generally a little bit further. So at what point do we reach what you would describe as a shortfall from maximum employment? Thank you.
Sure. So on your first question, I'm not going to talk about anything that relates directly or indirectly to the election. On the second one, this is the great question, and it's the one we think about all the time. So I'll just say a couple things. There's nothing really surprising here. What we know is that the unemployment rate is low. We also know that it's moved up significantly from a year or so ago. So we've seen a big change upward in unemployment. Sometimes that has meant bad things. So far, it doesn't appear to be. It appears that I wouldn't say that the labor market has fully stabilized, because I do think it's continuing to very gradually cool, but it seems to be in a good place, and our policy, of course, is designed to keep it in that good place, to maintain the strength in the labor market, while also enabling further progress on inflation. You mentioned a bunch of indicators, and you're right. The openings to unemployment rate is back to a normal level. I would characterize it more broadly as normalizing. You mentioned wages. Wages are still running just a bit above where they would need to be to be consistent with 2% inflation unless productivity is going to remain at this high level. If we see productivity, more sustainably at these high levels, then that would sustain higher wage gains. So I would say, in fact, you can say it the other way, that wage increases are now consistent with 2% inflation given current productivity readings. But of course, the lore on productivity readings is whenever you see high readings, you should assume they're going to revert pretty quickly to the longer-term trend. That has always been the case for 50 years. But it may be that we're now 5 years. If you look at the NIPA revisions that came out a month ago, we're 5 years into a nice set of productivity readings, which are sustained and very healthy. But overall, it's a good labor market. We could talk about 20 different data series. We'll be looking at all of them, of course. We don't want the labor market to soften much from here. We don't think we need that to happen to get inflation back to 2%.
Victoria.
Hi, Victoria Guido with Politico. Some of the president-elect's advisors have suggested that you should resign. If he asked you to leave, would you go?
No.
Can you follow up on, do you think that legally you're not required to leave?
No.
Mike.
Michael McKee from Bloomberg Radio and Television. You talk a lot about what the data are telling you and how you are dependent on the data, but in terms of forward-looking assessments of the economy, what are you hearing from CEOs or other officials around the country? What did you hear today from the regional bank presidents about what companies and consumers think about where the economy is going from here rather than looking backwards? And does that match up with what your forecasts have been and what you think the appropriate policy path should be?
So it's hard to characterize a really interesting set of discussions we had, and of course you'll see them in the minutes in 3 weeks. But I would say this: I think the comments from our Reserve Bank colleagues and from the CEOs that they talk to are pretty constructive on the economy right now. Pretty constructive, feeling that the labor market is back to normal, to the point where it's no longer that much a discussion topic in their world, whereas 2 years ago it was all they were talking about. So they feel like the labor market's in balance. People feel good about where the economy is. Demand is obviously pretty strong, and you're seeing 2.8% growth in the third quarter estimated. Maybe the year's 2.5%. This is a strong economy. It's actually remarkable how well the U.S. economy has been performing with strong growth, a strong labor market, inflation coming down. We're really performing better than any of our global peers, and I think that is reflected in what you hear from what I hear people hear from CEOs. I don't get to talk to a lot of CEOs in my job, but I hear what others summarize from those, and of course I hear the Reserve Bank presidents do a lot of that, and it's pretty constructive overall. Now, that's not to say there are areas of caution and things like that, but ultimately, overall, pretty positive.
Well, to follow up, the areas of caution, if there were black clouds on the horizon that you identified as something you're watching, what would they be?
I think it's things like clearly geopolitical risks around the world are elevated, and just as clearly they've had relatively little effect on the U.S. economy. Now, that can change through the price of oil or otherwise, but people talk about those as something that's on the horizon all the time. But ultimately, if you look at the U.S. economy, its performance has been very good, and that's what we hear from business people, and expectation that will continue. If anything, people feel next year, I've heard this from several people, that next year could even be stronger than this year.
Andrew.
Hi, it's Andrew Ackerman with the Washington Post. I just wanted to follow up on the discussion earlier on fiscal policy. Your predecessors, Greenspan and Volcker, spoke up loudly when they thought large budget deficits endangered financial, economic or financial stability. Will you do that too? And right now we're in a period of full employment. We have
I will mute the FOMC meeting because currently these questions have nothing to do with any of the stuff that's already been said, and I think that crypto is starting to price in what already happened because we kind of already know what the FOMC meeting is about. These questions are nothing to do with the FOMC meeting. Currently, they already said all the important ones. Maybe there will be a couple more. I'll watch back the last couple of minutes of the FOMC meeting, but currently, this question I don't think has anything to do with what Bitcoin's going to do. And I don't think Bitcoin's going to react to anything that much because what Jerome Powell said has already been said in the previous FOMC meeting. Nothing really has changed, except for a couple things which I have noted over here. First of all, Federal Reserve basically confirmed that they're going to cut the interest rates by 0.25%. So the new range is 4.25 to 4.5%. Basically, interest rate they're going to lower. Uh, and that's because, of course, whenever they're lower interest rates, it's actually not good. It's good for Bitcoin. So this could be really bullish for Bitcoin. But of course, what's next? He also said October job growth was hit by hurricanes and strikes, and only 12,000 jobs were added. Basically, the unemployment rate is moving up, but it's remaining low. And that's what caused this crash over here is that when he said that unemployment is going up, but slowly. That's what he's saying. This could either be the beginning of a massive unemployment cycle rising up, or it could, of course, just be like he's trying to convince everybody. And I think that, yes, it could possibly just be a hurricane caused event, just mishap that, of course, a one off, like he's saying. Just unemployment went up because, I mean, a whole state and a half got like what should we call it, hit by a natural disaster. And of course that makes sense. That's what he's trying to blame it on because he wants to calm the people down. And so when he wants to calm the people down, what does he say? That's what he said over here. He said the what did he say? Let's just say uh everything's going solid, everything's going great. Uh they're committed to data dependent decision making, like he said. That's what quoting him. The market reaction has been modest, but with slight gains in major stock indexes, like everything's going up slowly. They announced that they're slow progress, but the only thing is there is some bad data for, and what he's saying is that about that bad data, hopefully they'll clear up this data next couple months. Basically, this FOMC meeting isn't that impacted. Bitcoin is not impacted by this FOMC meeting that much. I think that this, even if this FOMC meeting was not here, we would have a roughly around the same amount of price. Everything that was said already was known, and that's basically that job markets are slowly going up, but it's fine, and they are continuing to watch it, and it's still really low. And maybe, I mean, in the next FOMC meeting, I think the next FOMC meeting will be important because the next FOMC meeting will be able to see if this job market unemployment rate is going up because of the natural disasters, or if it's going up because of some other reason or something to do with the government or the US government. Yes, we have actually some more interesting news that I actually want to talk about after the FOMC meeting, which I guess I could talk about right now. First of all, Detroit residents will have an option to pay taxes, other fees with cryptocurrency. So the city, Detroit, is to become the largest in U.S. to accept cryptocurrency. Detroit is accepting crypto to pay their taxes, which is something government related. This is more uh, opening up to crypto. This is the government opening up to crypto even more. This is really, really bullish. The cryptocurrency payments will be accepted through a secure platform managed by PayPal. So PayPal is already managing this cryptocurrency payments. And according to the releases from the city, this is really, really bullish for Bitcoin as well because now people will be paying their taxes with crypto, so more people will be buying crypto. This is really bullish. We have so many bullish news that I've been talking about. This is really cool, and this once again can increase demand for Bitcoin. And I think that Bitcoin has a really good trajectory ahead of itself, that it could continue rising. And of course, 87,000, like I said already, 150,000 and $212,000. What's next? We have something that's not fully bullish, and that's here. That's the Wall Street Journal saying the federal government is investigating cryptocurrency company Tether for possible violations of sanctions and anti-money laundering rules. According to people familiar with the matter, the criminal investigation run by Manhattan U.S. Attorney Office is looking whether the cryptocurrency has been used by third parties for illegal activities. Basically, the government is investigating Tether because they think that it's something to do with money laundering, which is what everybody says. And of course, this could affect Tether. It could affect the stable coin. And I mean, we had affected stable coins before, USDC, stuff like that. And while it is tethered to the dollar, I think um while it is tethered to the dollar, has nothing to do with the government. It's completely just, it's a crypto coin. And I believe that they're going to investigate. I don't know the whole news of it, but that's bearish news right there. This is news that could cause crypto to fall down. Let's look at Tether real quick. Even though Tether's a stable coin, let's just open up Tether. USDT. Tether, even though it's a stable coin, still moves slightly. It's not perfectly pegged to the dollar, but look at this. Tether is pumping. Tether does not care. It's at 0.0012. And by the way, this is how the tether works. If tether falls down, they print more tether to um, basically keep it at 1 to 1 with the dollar. They release more tether. And look at this, tether is going up. Last time it was this high, I believe it was all the way back over here in March of 2024, the beginning of March, which is, let's just look at March 2024. What was March? March was all the way back over here. March of 2024, March 9th, which is right here. So Tether went up with Bitcoin. This is when March 9th happened. It was going up with Bitcoin. So it was so volatile right over here that even Tether went up. So many people bought Tether. And because I think so many people bought Tether because they got out of Bitcoin. So if Tether's going up this much, that might be because some people are leaving Bitcoin, which is, of course, not fully good. But anyway, we have some bearish news, but that bearish news is nothing because even though Tether's getting investigated by the government, that doesn't mean they're being sued. They're just being investigated. That's it. And every single other thing is bullish. We see the election, like I said already. We see everything else. We see Detroit. All that is bullish news that I think Bitcoin is reacting to really well. Bitcoin has a really bright future. Let's just put the FOMC meeting back on. Let's just continue watching.
Weakening in the labor market, and we believe we can complete the inflation task while also keeping the labor market strong, and that, of course, is exactly what we're trying to do.
Can you rule out an interest rate hike next year?
No, I wouldn't rule anything out or in that far away, but that's certainly not our plan. I mean, our baseline expectation is that we'll continue to move gradually down towards neutral, that the economy will continue to grow at a healthy clip, and that the labor market will remain strong. If you look at our that will not change from the September SEP. You know, that is our baseline forecast, and short of some exogenous event, that will continue to be our forecast for the foreseeable future. So, but ultimately, you know, we're not in a world where we can afford to rule things out a full year in advance. There's just too much uncertainty in what we do.
Let's go to Jean for the last question.
Last question.
Hi, Chair Powell. Jean Young with MNI Market News. I wanted to go back to a comment that you had made about Americans being quite unhappy about the cumulative price level rises over the past few years, even though now inflation is back on a path to 2%. Would it be appropriate for the Fed to undershoot for a while on its inflation goal under the average inflation targeting regime so people have a chance to catch up?
No, that's not the way our framework works. We're aiming for inflation at 2%. We did not think it would be appropriate to deliberately undershoot. And you know, part of the problem there is that low inflation can be a problem too, in a way. But that's not part of our framework, and it's not something we're going to be looking at in our framework review. Thank you very much.
That's it. Okay, that's the FOMC meeting. So, like I said already, not that eventful. Everything that was said before in the September FOMC meeting. The only two things that I noticed that I wrote down for myself is, like I said already, the rate cut, which everybody knows, by 25 basis points, which is bullish for crypto, and of course, labor markets, like he said, have eased, but the unemployment rate is moving up, but it's remaining low. That's what he said. Of course, they also said the FOMC meeting, the economic activity continues to expand at a solid pace. Um, but he said that the October job growth got hit by hurricanes and strikes, and they had a lower amount of jobs increase than they thought there would be. So only 12,000 jobs were added to the job growth chart, but they expected, I believe, I don't know exactly how much, but they expected a lot more, and they're blaming it on hurricanes. Like I said already, hurricanes, I mean, we'll have to see for the next FOMC meeting. We'll have to look to the next one in December to see if this was something to do with the hurricanes and if the job will continue and will restabilize. But what he says is it's stable. We have nothing that new. The 4.25 to 4.5 basis point cut. The only thing is, he said he cannot guarantee, he cannot say anything about a rate hike the next year. So he cannot fully confirm there's going to be a rate hike next year. Now, of course, uh, we know that the Federal Reserve never likes to release what they're gonna do because what they once they release this stuff, it's gonna be set in stone. But what we do know is that him not confirming that there's gonna be a rate cut could be significantly affecting crypto. But look at this. It's 11:30. Let me just put a line right over here at 11:30. Happened right over here. And for first couple moments, we had a sideways action with nothing. We had a small correction down, basically saying, "Oh, that was a reaction to the job market report, saying that the job market the unemployment rate has lowered, I mean, increased just a little bit." But after that, most of the news was bullish. Most of the news, Bitcoin did not care that much around. And of course, if we zoom out to the 30-minute or 15-minute time frame, you can see that this is the only thing that happened right over here. Not that much change. Nobody really cares about this FOMC meeting that much. The election had a lot more impact. It was a lot more global, and people are generally still more bullish on Bitcoin. With all the bullish news, with Detroit accepting crypto payments, with Donald Trump being really pro crypto, with him firing the anti crypto people in the government like Gary Gensler, with the US government buying new Bitcoin, and it's going to be part of their reserve. They're going to buy 1 million Bitcoin throughout 5 years. That's really bullish. Multiple world company, I think multiple governments and multiple countries are now going to be scrambling to buy Bitcoin themselves, which increases demand. Supply is staying the same for Bitcoin because it's a commodity that has a limited supply, and that could, of course, cause Bitcoin to go up a lot higher than we think. And this FOMC meeting changes nothing. Even if uh, the news wasn't all perfect, Bitcoin's going to be really happy about everything overall. That's the FOMC meeting, guys. I'm going to go. I have stuff to do. I got to continue with my crypto trading and all that kind of stuff, guys. Uh, that being said, hope you guys enjoyed this video. I'll be releasing a video really soon talking about Ethereum, talking about altcoins, all that kind of stuff, predicting what's going to happen. I'll see you guys in the next live stream. Next FOMC meeting is happening in December 17th, I believe. We'll see that then. I'll see you guys in the next live stream. Bye.